So they put all these rules, the SEC put all these rules that we deal with now into compliance and stuff in the SEC to raise funds. That's what they did. But they also did something else. The U.S. government said in 1933, no longer can U.S. citizens own gold. If you owned a bar of gold, you had to sell it to the U.S. government. If you were caught with a bar of gold from 1933 to 1971, they could put you in jail. Most people in this room don't even know that. But the dollar was backed by gold, but U.S. citizens could not turn their dollars in for gold. Now, if you lived in France, you had some U.S. dollars, you could turn your dollar in for gold, no problem. But a U.S. citizen could not. Then at the end of the war, Second World War, 1944, a little place called Bretton Woods, New Hampshire, 44 countries arrived there with about 1,000 people, and they got this agreement. It was a big, long agreement. It took weeks and weeks and weeks. It's called the Bretton Woods Agreement, and they decided, you know what we're going to do? Now think about what they're about to say. 1944, since the United States has 2/3 of the world's gold supply, we're going to back the U.S. dollar by gold still, and the U.S. franc, or the French franc, is going to be backed by the U.S. dollar. So the French franc isn't backed by the U.S. dollar. Sorry, the French franc isn't backed by gold. The French franc is backed by the U.S. dollar, and the U.S. dollar is backed by gold. And that's where in 1944. And that was about the end of the war. All the navies, Russia's navy was gone, China's navy, Japan's navy was gone. Everyone's navy was gone, and our navy was not. And navies are the most expensive thing for a country really to do. Have. And same thing, everyone said, look, Bretton Woods, if you do this with the U.S. dollar, let's be the world's currency, tell me what we'll do. We, with our big, huge ships, will protect all your shipping lanes. Well, that sounds like a good idea. We need our shipping lanes, and we don't want to build another navy. It's very expensive. That's what happened in 1944 at Bretton Woods. Then 1971, August 15, 1971, what happened was France got on it. It was late 60s. France is like, wait a minute, those Americans are printing a lot of money. They don't have that much gold. So the French took all their cash, their U.S. dollars, brought them over and tried to get their gold, and President Nixon, August 15, 1971, said, no, we're going to reset. We're going to do a change. We're not going to have the U.S. dollar backed by gold anymore. We're going to have the U.S. dollar backed by the ability for the U.S. government to collect taxes from its citizens. And from 1971 until 1921, its 50-year anniversary last August, the dollar is 50 years old. It's a 50-year-old dollar. Before that, it's kind of backed by gold. But see, in 1933, there was a reset. Then in 1944, there was a reset. And in 1971, there was a reset. And since then, the dollar is called fiat currency. It's not backed by gold. And then after that, your grandfather couldn't own gold. He couldn't own it. He could own a gold watch, but he couldn't have a gold coin or a gold bar. It was against the law until after 1971. All right, let's keep going. So, the number one job of the Federal Reserve is to protect the U.S. dollar. How do they do it? How do they do it? They create insatiable demand. If you have insatiable demand for anything, like hotcakes, you can sell them, you can bake more hotcakes, sell them, bake more. The U.S. dollar is kind of the same way. How do they do it? First thing they do, they tax their U.S. citizens, and you have to work all year to get U.S. dollars to pay your taxes. You can't pay your taxes anywhere else. That creates demand. I have to work to get U.S. dollars. That creates demand. I need U.S. dollars. The second one is, I don't know if you know this, but most world oil transactions happen in U.S. dollars because of the United States. If you live in Germany right now for the last, decades, and you had a bunch of Deutschmarks and you wanted to buy some oil from Saudi Arabia, you can't do that. No. You have to take your Deutschmarks using the SWIFT system, wire your Deutschmarks to the New York Federal Reserve, change your Deutschmarks into dollars, then send your dollars to Saudi Arabia, then Saudi Arabia will give you some oil. That creates insatiable demand. Oil is the biggest product around, right? Except for the US dollar. Creates insatiable demand. You cannot buy a container of US oil from Saudi Arabia without US dollars. If you imagine China and Russia don't like this, we'll get to that in a second. SWIFT system requires US dollars. All the big banks around the world use SWIFT, you have to have US dollars. It creates demand. So they flood the earth. They're flooding the earth for the last 3 or 4 years with almost 0% interest rates. Why? Well, if I give you a loan for 30 years with US dollars, for the next 30 years you have to work and obtain US dollars to pay off that loan. They won't accept anything else. That creates insatiable demand for the US dollar. Why do they do this? Because the number one job of the Fed is to protect the US dollar. I know they have other jobs like inflation and stuff, but that's not their number one job. Their number one job is US dollar. And so things start to make sense when you think about it in those characteristics. Oh, we're going to get a little deeper. You guys are going to, okay, so I got some bad news for Bitcoiners. Now listen, I don't do predictions. I don't believe people can predict the future. I just do probabilities. Most of my whole life, what's the probability of me with a 3.2 GPA getting a job at a big corporation moving to the top? It's kind of low. What's the probability of starting my own company and winning? Better probability, I'm taking that path. That's my mentality. Okay. I believe what's happened in the last little while, I'm going to explain why. I have a high probability that the Federal Reserve has tried to take over or cage or box in Bitcoin. I love Bitcoin. I've purchased millions. I've sold millions. I purchased millions again. I sold millions. It's been pretty good. I'm not bashing Bitcoin. I think it's a great idea. I'm just telling you, you're going, it's a, look, there's a old proverb if you're religious in the Bible called David and Goliath. Little guy, big giant, rock, hits him in the forehead, he dies. Great. Out of 100 contests, if you do that over and over and over, Goliath wins like 98% of the time. It's such a great story because David won, and it's like, wow, he won, right? But usually the big giant wins, right? Bitcoin's, when it was created, it was destined to go up against the Federal Reserve, the biggest, baddest company that's ever been around on this planet. All right, let's go into that now. Tell me why my probability is this way. Okay, which of these statements is true? Number one, the U.S. Federal Reserve does not even care about Bitcoin. Number two, the U.S. Federal Reserve would never try or even want to control Bitcoin. Number three, the U.S. Federal Reserve does not view Bitcoin as a threat to the U.S. dollar. Number four, the number one job of the U.S. Federal Reserve is to protect the U.S. dollar. Which one do you think is partly true? At least close to being true. Right, exactly. Okay, all right. Rhetorical questions. Okay. The idiot restaurant waiter analogy. All right. People bash Federal Reserve all the time. They're idiots. They're such idiots. They said they did overshot this, and they transitory inflation. And they just don't know what they're doing. They're such idiots, right? Well, they own the best-selling product ever existed, and you're calling them idiots? I understand they make mistakes, but let's go through who's the idiot. Okay, here's the analogy. I'm a waiter at this big restaurant. You guys are all waiters, and Jamie's a waiter. And we all wait on these tables. And Jamie just all of a sudden, he's always like, oh, I'm so bad at math. I'm terrible at math. Everyone ever knows. He's told them over the years he's bad at math. Everyone knows Jamie's bad at math. You know why? Because when the person pays for their meal, they send the money in, and Jamie always brings back the wrong change. And everyone's like, no, he's just bad. He's not French. He's just bad at math. But then, wait, we did an audit of Jamie's last 100 tables. And 100% of the time, when Jamie brings back the change is always in Jamie's favor. It's never in the favor of the customer. Wait, if you're bad at math, shouldn't like 50% be in the, for the customer, 50%, that's all. So who's really bad at math? Who's really the idiot in the room that believed all these years that he was bad at math? It's kind of the analogy I have with here. The Federal Reserve owns the best-selling product in the world, the U.S. dollar. I know they make mistakes. I'm not saying they're perfect, but they have more data and more information than me and you will ever have. They're smart people. And I think, why do we believe, I'm really bad at math, I'm really bad at math? Why do we believe that? Why do we believe, God, I'm about to get we want 2% inflation. We're going to raise interest rates, we're going to lower interest rates. Interest rate, inflation, it's transitory. Oh, it's not transitory, it says transitory. Why do you believe this? Or 80% of it. They're doing the same thing. Oh, I'm really bad at math. And you're going, yeah, they're idiots. And you get people on CNN, and you got people on Fox, and you got everyone. Oh, we hate the Fed, they're such idiots. Really? the best-selling product in the history of the world. I don't think they're idiots. I think we don't understand really what's going on. We don't have our antennas up. We've got to listen to it. Okay, I'm going to go deeper on you. You guys ready? All right. Summer 2020, J.P. Morgan gets fined $1 billion. You know what they got fined $1 billion for? Manipulating the precious metals market for 9 years. Give me a break. What's the SEC doing? I don't know. It was like 960 million, right around to $1 billion, because it sounded better on the stage, because you know how much billion is, right? So $960 million, $1 billion they get fined. So J.P. Morgan hid this from the SEC for 9 years. 9 years. That's as long as I did jeans. I did jeans for 9 years. It was a great business. I was a jean king, used jean king. In Europe, especially. And to take it even worse, J.P. Morgan, like I'm reading my notes here, J.P. Morgan had to deal with an ETF that actually could buy the spot price of gold and silver, like GLD and SLV. They are ETF that when you buy SLV on stock exchange, SLV has to go out and buy physical silver. And so J.P. Morgan was able to manipulate that with that in existence. That's hard to manipulate. They were able to do it for 9 years because they had another ETF which you can buy futures on silver and gold. And they used spoofing orders to do that. J.P. Morgan is a company. It has limited funds. It's not like unlimited funds, it's limited funds, and they still did it for 9 years. Now, gold is 10 times larger than Bitcoin. A private company with limited funds fighting the SEC and having an ETF that can buy spot. They still were able to manipulate it for 9 years and got fined $1 billion for manipulating the gold and precious metal market. And that gold is 10 times bigger than Bitcoin. Okay, so, wait, did I skip one? Let's go back here. Don't want to miss anything? No? Okay, got it. All right. So, fast forward to November 2021. Okay, that was the summer of 2020. The SEC learned, they learned how JP Morgan did it. That's why they fined them. They had it in court for a while, right? So this is what happens in November of 2021, just a few months back. Bitcoin hits an all-time high. The SEC, what they did, they allowed in November a ETF that can trade Bitcoin futures. Listen what they didn't do, and they didn't allow. They denied an ETF to trade spot price on Bitcoin. There's an ETF that wants to, you buy this ETF and they don't actually go buy Bitcoin. No, we can't do that. We're not going to allow that. But we will allow an ETF that you buy and they'll have to go buy futures. Okay? The SEC lawsuit against Ripple. Ripple is another coin that competes against SWIFT. Remember I told you SWIFT promotes the US dollar? In November, the SEC extends indefinitely the case against Ripple. It should have been over. They extended it. It's still going on today. Bitcoin starts an uncharacteristic trading pattern at the end of November. And this is what I love, because I love to listen to people who like to get in front of a microphone and they just like to spew off things you gotta get too clear. Hillary Clinton loves to get in front of a microphone. And she said she warned the rise of Bitcoin could undermine the US dollar's reserve currency status. Now let me ask you a question. Probability. What's the probability she just grabbed the mic and just said that? Or was she privy to some top secret meeting about the Fed going against Bitcoin earlier that month? And she wanted to get in front of an audience with a microphone and look smart, or maybe give warning to all her memes. What's the probability? Was it just an off the cuff, or did she know something about saying? Because it all happened in November. All these things happened right at the same time. Now, if you have a radar screen, you're looking at that. You know what I see? If that's my radar screen, I see a cat flying in at Mach 1. That's what I see. Cats don't fly at Mach 1. No, they do. It's a cat. Number one job of the U.S. Federal Reserve is to protect the U.S. dollar. Okay, so how do you control something? How did J.P. Morgan do it? This is basically what happens. And this is more trading theory, but this is how it happens. If you can obtain 45 days of trading volume of something, you can almost control it. You can not kill it. They don't want to kill Bitcoin, because if they kill Bitcoin, another coin will rise and take its place. They just want to control it. So, this is my theory. So if Bitcoin trades 100 coins a day, if you can get 4,500 Bitcoins, you can control it. If it trades 1,000 coins a day, if you get 45,000 coins, you can control it. This is how to do it. So if I have 45 trading days of whatever it trades, whatever thing I'm doing, and the stock starts to go up, I plant my 45 days of trading volume right there, and I won't let the price go above that. At the same time, I go to the futures market and I sell short, spoof orders. People go, I'm shorting the futures, and I see there's a big seller at 69,000, and it won't go above 69,000. And we all go, there's a seller, I better sell. So we sell, because we can see there's definitely a seller, and it goes down to 68,000. And you know who buys? The Federal Reserve. They start buying at 68, and they start replenishing their 45-day supply. And then we say, oh, there's a buyer, I better buy it. And they start buying, and it goes back to 68,900. And they put their 45 days of trading right there. It won't go above it. And they spoof it. And that way, that next high is lower than the previous high. And that's a bearish signal. And then it sells down to 67,900. And guess who buys? The Federal Reserve buys. And they replenish their 45-day supply. They're not trying to kill it. They're trying to, and it goes back up. They don't let it get a higher high because they want a trending chart. Because people watch charts. You guys do charts. That's a bearish chart. And everyone goes, oh, it's a bear market now. It's going down. That's how basically, so let me show you this here. July, 1 year after J.P. Morgan got fined $1 billion for controlling the personnel market, 1 year after this happened. So what I think happened in the first half of 2021, the Federal Reserve learned how it happened and got all their stuff ready to go. And they started buying in July 2021 at $30,000, and they bought all the way until November. They acquired 45 days of trading volume in those months. And then in November, Hillary Clinton says, that Bitcoin, that could kill the US dollar. And the SEC says, we got to extend the XRP, lawsuit. And the SEC says, no, we're not going to allow an ETF that can buy spot price on Bitcoin. We're only going to allow an ETF that buys futures on Bitcoin. And then I was kind of, I had a theory then, and then see the red box? See that little flat part right there? It went up and it traded flat. That was about a week. It traded almost perfectly flat. Bitcoin doesn't do that. And I was like, something just happened. And then I put all this together and I gave this whole presentation I'm giving to you about, it was February. And I haven't changed much of it, it's pretty much the same. So I believe Bitcoin is in a box, it's in a cage. If you make me guess, I think the top of the box is 50,000, and the bottom of the box is 30,000. I think they're going to buy 30, they're going to sell, and they might do it for years. I don't think it's going to go away. They're not going to kill it. They're just going to control it. And they have a lot of things on their side. Look here. People tell me, but John, Bitcoin can't be controlled. It's international. It's outside. It's outside just all the fiat currency. I said, I know. So is gold. People in India can buy gold. People in Tibet can buy gold. People in Chile can buy gold. People in the United States can buy gold. It's a worldwide thing. How did someone control something that's 10 times bigger than Bitcoin? And it's the same thing. How did someone do it? So you're saying they can't control Bitcoin because it's worldwide? And they did control Bitcoin, gold, because it's worldwide? They got fined $1 billion. All right. If you see here, the U.S. Federal Reserve has unlimited funds. Unlimited funds. To keep the interest rates low, the U.S. Federal Reserve purchased purchased $120 billion a month of bonds to keep interest rate low. Buy more bonds, buy more bonds, buy more bonds. Interest rate, the yield goes lower. Buy more bonds, interest rate goes lower. They did this for almost 30 months. They have unlimited funds. Unlimited. JP Morgan was a company, had limited funds. Federal Reserve has unlimited. Bitcoin is 10 times the size. JP Morgan, 9 years, US Federal Reserve, the most powerful country, the most powerful company ever invented. And they're not going to give up their power. Their power is their best product. You wouldn't give it up, I wouldn't give it up. Now, Xi Jinping, Putin, they've been knowing about this for decades. They hate this. If I was running Russia or I was running China, I wouldn't like this. I have to change my currency into US dollars. Why can't I just take my currency to Saudi Arabia and buy oil? So, since 2008, you see a chart, China and Russia have purchased more gold every single year. Every single year, you see a chart on it. Because they were hoping or thinking, one day in the future, there's going to be a crack in the US dollars printing paper. And I'm going to step in and say, hey, you know what? We're not going to buy US oil. We're not going to buy oil in US dollars anymore. If I was that other country and I was another country, I'd try to do the same thing. I don't want to buy someone else's currency, fiat currency. This doesn't make any sense. So it's a big world game. And I just wanted your antennas to be up to know what's really kind of being played out. Now, again, I don't know if I'm right. I just have a probability. I think my probability is about 80-85% probability that I'm right. I don't want you to corner me back here and say, John, I love Bitcoin. You're talking about Bitcoin. Look, I'm 15% wrong. I think there's a 15-20% chance I'm wrong. I'm not saying I'm right. I'm just saying the probability of me being wrong is low because I studied JP Morgan. I studied what they did, how they did it, and then I studied what I just showed you about the Federal Reserve and the US dollar and Bitcoin. Bitcoin should already be $100,000. It should. It should have went up. But it didn't. And that's my theory. But again, I think maybe there's a 15-20% chance I'm wrong, 80% because I don't predict the future. I just give probabilities of the future. Okay? What's the probability of something happening? And that's kind of how I run my life and everything else kind of thing. Okay? So, here's the thing. There's 3 rules of real estate. Location, location, location. There's 3 rules in investing. Don't fight the Fed. Don't fight the Fed. Don't fight the Fed. I do realize there's people in the eyes that don't agree with me right now. I get it. But listen, you don't come to stuff like this to hear the same old thing. Look, if I know that 2 + 2 = 4, and you know that 2 + 2 = 4, there's no reason for me to write a book about it. We both agree. The only reason I write a book about something is when we don't agree with something. We don't exactly agree. I have to write a book. We don't agree exactly. I want to write my story, so you read it, and then you go, I still don't agree. That's fine. But at least you don't come to events like this to hear the same old thing. And I don't want to give you the same old thing. This is the way I talk to my sons, my daughter-in-laws. I got to tell you the story. My 2 daughter-in-laws. I asked my daughter-in-laws one time,